So, very good evening, everyone. In the last class, we have completed the discussion in depth in relation to definition of what is a transfer as defined in section 2 clause 47. There we understood what is a transfer in depth, which there includes a sale, exchange, relinquishment of asset, and extinguishment of any rights on the assets. Next one, compulsory acquisition, conversion of stock in trade into capital asset or capital asset into stock in trade, to be very clear, and redemption of zero coupon bonds. Next, immovable property on a part transfer as defined under section number 43A of Transfer of Properties Act. And thereafter we went into the concept of any transaction which gives a right to enjoy the immovable property possession by any other person, especially in case of a cooperative society, we have discussed in detail. And now we are going to start with the biggest area in this chapter. When I say the biggest area, really it will be very much huge. Okay, hours together we need to discuss on this. In parts I will be discussing this because 7-8 hours I can't discuss one single concept. So I will break into decent parts such that you will understand each and every minutest of the details regarding this particular concept with its interpretation, the rationale, and one amendment provision is also there in this particular section applicable for May 2026 examinations. So that also I am going to cover in this particular lecture. One very important amendment, okay, and that has a scope of coming in the examinations as well. So let us try to understand what are the next concepts we are going to start with. You can see the screen. So we completed till this particular area, transaction providing the enjoyment of immovable property. Now we are going to discuss transfer when it will be effective. Effective means when it will come into legal effect. Okay, when it takes a legal effect. Next one, computation of capital gains. Computation of capital gains. So how to compute the capital gains we are going to discuss. Next one. Then we are going into part D. Transactions not regarded as transfer. Section number 47. You can see here once. Transfer is the main concept. In that A, definition of transfer completed. B, transfer when effective. We are going to discuss now. Upon transfer, what will happen? 48 section will get attracted, capital gain computation. What is not a transfer is the part D. A part D is the biggest one among all the concepts in this chapter. Okay. So, because if you remember section 2 class 42A, definition of what is a short-term capital asset. At that time, we discussed everything in that. But there are a lot of explanations below that. Those explanations will tell about period of holding. Period of holding. Should it include the previous year holding period or not? All these we are going to discuss there. But I did not discuss. Why? We are going to discuss in this particular area. So all concepts which are pending here and there, we are going to merge into one single concept in the name of section number 47. Okay. Next one. Each and every situation I analyzed. I can assure you one thing. So many times I said again and again, I have been reiterating the same. At Koushik's Pathshala, we will concentrate on concept. Okay. On the quality as well as the quantity. You should have clarity on both. There should be a volume of discussion, not just summary, and there should be quality in the discussion, not just reading the notes. So we will take absolutely the bare hand, post-mortem line on line between the words, and then only we are going to close the section number 47. Complete all the 4 lectures I am going to upload on 47. On only one section. Section 47, 4 lectures will come. Either lecture 1 in that. Lecture 2, 3, 4 also will come. Complete all those. Along with section 47, we are going to complete another 4 sections. So it's not just 47. 47 has a cluster impact where it will get attracting all other sections as well. We are going to discuss section 50, 55 subsection to class AC when we are reading 47 only. So again in section number 55, we need not read that. So while reading section number 47, we are going to read section number 49, subsection number 1, read with section number 49, subsection number 4, read with section number 49, subsection number 9. So again, we need not read those sections when we go there. So that way we are going to save a lot of time when we are discussing those sections independently. So please listen carefully. 47 section is the center of attraction of this chapter, capital gains, that we are going to discuss today along with amendment. Okay. So since I am uploading these lectures also on YouTube, the capital gains chapter, to be useful for all, comment below as to how you felt about this particular lecture, because lot of efforts and sleepless nights entered into these notes to make it as simple as possible for you to understand. You can see there, transactions not regarded as transfer, first opening notes. Situations, there are 21 situations. All 21 situations we are going to cover in a different sequence, not in the sequence of the Bare Act. In a different sequence I am going to cover, but all 21 I will cover. Okay, partition of HF is the first one. Not like just reading the line, we are going to analyze it through a diagram, and then what is happening next, how the period of holding is calculated, explanation 1, sub explanation 1 in that point number A, section 2, section number 42, class 42, section 2, class 42A, cost of to the transfer, how it should be calculated, read with the 49(1) Bare Act, illustration on that, next illustration on that, and further illustration explaining the rationale behind the provision. Asal, why that provision came like that, partition of HF. What are the two situations that can come? What tax planning people can do on this? That we are going to discuss here. Next, gift. Gift by an individual, amendment with effect from 1/4/25, applicable for the first time for the May 26 exams. So prior amendment, post amendment. Why amendment came? Rationale behind the amendment. The basic provision, whether it is a transfer. Interconnected provisions, 49(1), 49(4), section number 56, subsection 2, actuality section 56, subsection 2, class 10, subclass B, item A and item B. So, Bare Act 49, in that 49(1) to 49(4) Bare Act, section number 56, subsection 2, class 10, Bare Act, explanation D below section number 56, subsection 2, class 7. Next, explanation below section number 56, subsection 2, class 10. Holding period, explanation number 1, 1B to section number 2, class 42A. Analysis through a diagram. Summary of the entire provision. This much efforts we are putting inside to make the tax class the way in which a lawmaker meant to discuss, not summary. So let's concentrate properly, understand tax in its right way, in which the lawmaker wanted to convey. Let's begin. See here. Transfer, when it will become effective. See, section number 45, subsection number 1, charging section to the chapter says that there will be a capital gain tax on transfer of a capital asset, and the chargeability will be generally in the year of the transfer. Previous year of transfer is the previous year of chargeability. Okay. What do you mean by transfer? Date of agreement to transfer is a transferor. Date on which signatures are made is transfer data. See, for example, we signed on agreement to transfer. We signed on agreement to transfer on 31/3/2025. Okay. Executed really means a transaction happened really. Transfer actually happened on 5th April 2025. Now, transfer previous year means which date? Execution data, transaction execution date, or signing date, which should be considered? Like the doubts will come. Therefore, case laws are there which will discuss about this. Let us see what is the summary of the cases. See, there is a property. It can be movable or immovable. If the property is a movable property, the title of movable property passes. Title means the ownership on the movable property passes at the time when the property is delivered pursuant to the contract of sale. Means, what makes the transfer complete? Delivery will make the transfer complete. Sale of Goods Act is referred here. As per the Sale of Goods Act, there are 3 types of delivery. Active delivery, also called as actual delivery. Second one, symbolic delivery, constructive delivery. Goods are given. Goods are given. For example, gold is there. Gold biscuit. Gold biscuit is a movable property. Gold biscuit is delivered by seller to the buyer. The date on which delivery is done, that day will be treated as a date of transfer. Okay. Payment of consideration is not important. Delivery is important. You can pay consideration later. Delivery date will be treated as the date of transfer effective. Okay. Delivery can be of three types: actual, symbolic, constructive. I don't wanted to discuss what is actual delivery, symbolic delivery, constructive delivery now, which you need to learn at foundation and waste my time, waste your time as well. Just to remember, delivery is important in case of a movable property. Okay, next. Sir, no sir, this is not a movable, this is a immovable property. Then what you will do? If the property under consideration is not a movable property, but if it is a immovable property, normal cases lo what will happen? Title will not pass till the conveyance deed is executed and registered. Okay, listen carefully, very, very important. Transfer when effective, what they said is title means the ownership will not pass till conveyance deed is executed and registered. Conveyance deed means the transfer deed. Registration copy will be there in a immovable property, land documents, and transfer document will be there in a sale deed. Sale deed is called as a conveyance deed. Conveyance means the transfer deed. Okay. Until and unless conveyance deed is executed, signed, and registered, ownership will not pass. Ownership will not pass. But transfer is effective not from the date of registration, but from the date of execution itself. Okay, means what? Ownership might not be passed. Transfer under this chapter will be completed irrespective of transfer of title. I mean transfer of ownership. Sir, I did not understand, sir, what you said. I will explain you with easy example which will make you understand the logic. See here. See here, I will give an example. Okay. On 33/25, A transferred a house property to B. A transferred a house property to B. So on 33/20/25, A transferred house property to B. B paid a consideration of 1 crore for the house property purchase. Who paid? B paid rupees 1 crore on the purchase of that particular house property. Okay. Transfer deed and a sale deed is executed. Means intention of A to sell the property and transfer ownership to B is completed by that time. Okay, is completed by that time. Now you listen carefully to the logic. Forget about all other acts. Think from income tax point of view, Department of Income Tax. Now listen, what happened? A transferred his house property to B. B paid consideration to A. Now who is the benefited party? Both are benefited. B gets the house property. B gets the house property. So there is an asset created for him. A gets consideration. Crores of money received by A as well. Who is a benefited party here? Both are equally benefited parties. Okay. Now if you tell upon registration only transfer is complete, intentionally these two idiots will never register the property. Both are close friends here. A will tell to B, "Arey, why registration and other formalities? Let it be in my name only. You paid me 1 crore. I handed over the keys. That's it, over. If I register, then taxability under the head capital gains will get attracted because upon registration it becomes a transfer. transfer, if it gets effective, 45(1) will get attracted, capital gain tax will be levied on me. So let us do one thing, good arrangement let us make. You pay me 1 crore, I will sell the property to you, I will transfer you the documents, ownership I will give it to you. Registration let us not do. Let us put registration as incomplete. Remaining everything let us complete. Now what they will do? They will not register this transfer. Okay, means formally A will sell to B pay consideration, A will tell to B take my keys, hand over the possession, enjoy the property. Life again I will not touch this property. I am writing a what to say, a deed of conveyance. I will not register that. I will not register that. Okay, now what will happen? Lifelong never they will pay capital gain tax on this. A purchased this property for 10 lakhs, sold this for 1 crore, 90 lakhs capital gain is there. On that, whose grandfather will come and pay tax? Like this, government will ask the question. A will tell registration not completed, therefore transfer is ineffective. Since transfer is not yet effective, don't ask me to pay capital gain, because charging section asked me only when the transfer is effective, you need to charge a tax of capital gain. Just to eradicate this, case laws came and said that ownership will not pass. What will not pass? Ownership will not pass unless it is registered. But a transfer will be effective not from the date of registration, but from the date of execution itself. Means what? The day on which transfer is executed between both the persons, transfer is effective on the date itself. In my example, previous year of chargeability will be previous year of transfer, that is previous year 24-25. Previous year 24-25. This is how you need to understand. Okay. Both these happened in one case law only. Court gave a judgment. Actually, case happened on immobile property. Court also said about movable property. So this happened in Alapati Venkataramaya versus CIT Supreme Court case law. Old one, but very, very important, which has given a good insights on how to understand the date from which the transfer becomes effective. Next one. Sir, in case of a power of attorney transaction. Power of attorney transaction. Already we discussed now supra. Supra means super reference above. Super reference above. Already we discussed now above. Power of attorney. Go back to the past video and you look into that. I don't want to waste time. Next. Section number 48. Section number 48. What is it? Computation of capital gains. Computation of capital gains. Okay. First, let us move on into the Bare Act. 48 law, we are not going to read everything. We are going to read only one part. Remaining part of section 48 we will discuss separately. See, mode of computation. The income chargeable under the head capital gains shall be computed by deducting from the full value of consideration received or accruing as a result of transfer of capital asset the following amounts, namely. When I use the word namely, it is giving a impact as if it is means used in a definition. If in a definition the word means come, how will you treat the interpretation? Only those should be included, or only those should be read. You should not add anything, you should not remove anything. Strictly you have to read the definition. Namely, in a normal section will have same effect like means used in a definitional section. Okay, let's read. Income chargeable under the head capital gains shall be computed, okay, by deducting from the full value of consideration. Never use the word sale consideration, because sale is only one of the ways of transfer. Okay, one of the ways of transfer. If there is a sale consideration will be there. If there is an extinguishment, full value of consideration will be there, though there is no sale. So therefore, don't use the word sale consideration. Instead, use the word full value of consideration. We call it FVOC. Okay. So from full value of consideration, there are 1, 2, 3. 3 deductions are there. How many? 3 deductions. What is the deduction number 1? expenditure incurred wholly and exclusively in connection with such transfer. Expenditure incurred wholly and exclusively in connection with that transfer. Okay, not in connection with acquisition, in connection with the transfer. Okay. Cost of acquisition of asset and cost of any improvement thereto. So you will acquire the asset, that cost of acquisition and cost of improvement if any. Cost of improvement if any. So that you can reduce. Explanations are relating to business trust. We will discuss later, not now. Okay. Next. In case of value of any money or capital asset received by a specified person from specified entity referred to in subsection 4 of section 45, the amount chargeable to income tax as amount as income of such a specified entity under subsection which is attributable to capital asset being transferred by specified entity calculated in a prescribed manner. We will discuss this in section 45 subsection number 4, not now. Hold on. So we have to reduce these two mainly. See here. Full value consideration. Okay, take it. From that, reduce expenses of transfer. Reduce it. Okay. Net consideration will be 1 minus 2. Other net consideration. Next. From this, reduce cost of acquisition, cost of any improvement. Reduce. Capital gains will be this 3 minus 4 minus 5. Okay. From that, there are exemptions between 54 and 54H. Okay. But remember, everyone, these exemptions are 54 to 54H, 54, 54B, 54D, 54E, 54E, 54 again EC, ED, like that. So many are there. All exemptions are not available to every kind of capital gain. If capital gain calculated under 6th point is a short-term capital gain, exemptions are very less. Okay. If capital gains as calculated in 6 is a long-term capital gain, exemptions under this particular part will be more. Okay. When it will come, when it will not come, we will discuss separately. That's a different story altogether. When we come to 54 to 54H, I will discuss there. But overall understanding should be there now for you. What is this? So therefore, again, take full value consideration. Sir, what is this full value consideration? This you will understand once we complete section number 55 as well as section number 49 fully. Okay. Then you will understand what is this full value consideration. Don't ask any question now. And 45 section also will be referred to understand this. Second, any transfer wholly and exclusively in relation to transfer, deduct. 1 minus 2 will be the net consideration you are going to get. Next, take cost of acquisition, cost of improvement. From net consideration, remove these two. That will become capital gains. If this is a short-term capital gain, lesser exemptions will come. If it is a long-term capital gain, load of exemptions will come. Finally, the balance will be the taxable capital gains. Understood? This is the schedule of computation as said in section number 48. Listen here. See, this is in relation to non-resident. Okay, non-resident. This is in relation to units of a equity oriented fund or a business trust. Okay. Therefore, I am not going to touch all those now because separate discussion will be made on section number 48, balance part. So then we will discuss them. This is not the time to do that. So therefore, let us first concentrate on that part of section 48 which is relevant for understanding section 47. Okay. So what we discuss now, transfer when effective completed. Next one, computation of capital gains completed. See, expenses on transfer. Only such expenditure incurred wholly and exclusively in connection with such transfer shall be considered. Next, exemptions under 54 to 54H are not available to Long-term and short-term capital gain in same way. Just now I told that some exemptions are not allowed in case of STCG. Will be discussed separately. Next. Very, very important. Treatment of securities transaction tax STT. That's why I said wherever reference is there, we will cover that part of 48. 48 section is there now. See the provisos. 1, 2, 3, 4, 5, 6, 7. Seventh proviso has a reference. No deduction shall be allowed in computing capital gains in respect of any sum paid on account of STT. So, STT should not be considered. I kept the Bail Act reference here, you can read. Provided also that no deduction shall be allowed in computing income under the head capital gains in respect of any sum paid on account of STT. So, STT is not a deductible expenditure on account of transfer. So, in case of purchase of equity shares through recognized stock exchange or a business trust through recognized stock exchange and you paid STT, that will not be allowed as a expenditure in relation to transfer. Sir, I will not consider it as I will not consider this as expenditure in relation to transfer. I will add it to the cost of acquisition. That also you cannot do. That also we will read differently in a different section. So STT neither can be added to the cost of acquisition nor can be deducted as an expenditure at the time of transfer. Understood? Yeah. So see here. Full value consideration, expenses. 1 minus 2, net consideration. Minus cost of acquisition, cost of improvement, capital gain. Take exemptions, taxable capital gain will come. Next. So up to here we completed now. Now enter the dragon. The main area starts now. Transactions not regarded as transfer. There are 21 concepts in that. How many? 21 concepts are there. These are 21 concepts we are going to discuss here. We are not going to leave anything. Okay. I will give you a word. We will complete every minute concept in this 21. All 21 we will complete. Okay. Let's begin. Take it as a challenge. What others are not doing, let us do that. Okay. Normally, students will generally leave section 47. Only which are very important, like gift or like section number 47, 1. These things they will cover. But demerger amendment is there. That we need to discuss. Amalgamation amendment is there. That we need to discuss. Liquidation is there. Buyback is there. Reduction of share capital is there. Hell a lot many concepts are there. I am going to give you the good knowledge on what are all these transactions. And now we are going into transactions not regarded as transfer under section number 47. Means even though if there is a transfer of capital asset under this list, that will not be regarded as a transfer. Okay. Let's see the opening note before we start. Section 47 covers circumstances which are not regarded as transfer under the head capital gains. So under the head capital gains, these are not regarded as a transfer. Okay, done. Therefore, even though a capital asset is involved, still it is not regarded as a transfer and hence no tax liability under the head capital gain. This can be understood as under. See, in order to have a charge of tax under the head capital gain, there are two conditions that you need to satisfy. It should be a capital asset. There should be a transfer under section 47. Again, there should be a capital asset. There should be a transfer under section 47. If both these conditions are cumulatively satisfied, then capital gains will get attracted. Repeat. There should be a capital asset. There should be a transfer under section 47. Then there will be a capital gain. So, what is the significance of this section 47? There is a capital asset here, but there is no transfer that is involved. Transfer includes a sale, okay, exchange. Next one is relinquishment of any asset or extinguishment, compulsory acquisition. Like that, so many things are given. That is what is a transfer. Transfer includes them. Transfer excludes these. So we are now going to read a section which says what are not included into transfer. Okay, what are not included into transfer definition. So this plays a crucial role in exam for final. In this particular section, section 47, all 21 cases are applicable. For CA Inter, there are only 7 concepts that are applicable for exam. Okay, if any CA Inter student is listening to this, the first 7 what we are going to discuss are applicable for Inter and final. After 7, everything is applicable only for final. Okay, let us start. So transactions not regarded as a transfer means what? What are not treated as a transfer? What is treated as a transfer? We already read. What is not treated as a transfer? We are going to discuss now. So listen, charging section 45 says that there should be 2 conditions that should be satisfied. There should be a capital asset first. Capital asset already definition is completed. We already discussed about what is a capital asset. Section 2 class 14. Capital asset definition already. You should not put a blank face here once we complete it. Okay. See. Capital asset definition. This is charging section. Capital asset definition. Amendments does not include stock in trade, personal effects. Completed, na? So all these we already completed. Agricultural land, all these. So what we read till now, what is a capital asset we read. So in order to attract this particular chapter, there should be a capital asset. There should be a transfer. Then capital gains will chargeability will come. There is a capital asset. There is a transfer. There will be a capital gain charge. There is a capital asset, but there is no transfer. But there is no transfer. So then no capital gain. There is no capital asset, but there is a transfer. Personal effect transfer is there, but there is not a capital asset. So even then no. Sir, there is no capital asset transfer. There is no capital asset, there is no transfer. Then there is no capital gain. Simply PGBP will come under the 4th case. PGBP asset is not a capital asset. Second thing, there is no transfer. Generally used for manufacturing. Then both are not getting attracted and no capital gain tax. So capital gain will get attracted if 2 conditions are satisfied. There should be a capital asset. There should be a transfer as defined in section 2 class 47. If there is a capital asset, but there is no transfer, this case is attracted by section 47. What we are going to read is case 2. Okay, case 2 we are going to read. So technically to understand, this case we are going to represent now. Okay, case 2 we are going to discuss. Section 47 is not an independent section. That's what I told now. When we are reading 47 itself, we will complete so many other sections as well. Section 47 is not an independent section. It is dependent on many interlinking concepts. One should harmoniously read in connection with all the sections that need cross-reference. Example, I have given some list of sections which we are going to complete along with this. Section 2, class 24, income definition. 56, subsection 2, class 9, class 10, gift transfer. Okay, gift, other sources. Section number 51, 49.1, 49.4, 55, and section 2, class 42. These are all we are going to discuss in this particular area. Transactions not regarded as a transfer. Okay. See this particular document once. Have a glance for a minute. We will start with the main concept for the capital gains chapter. I am telling everyone listening to the lecture very clearly, examiner, one 6 marks question surely comes from 47 in interlinkage with other sections. So please listen carefully. This is the thing I can tell you. There are amendments also in 47. Be careful. Completed? Yeah. Next one. See. (47) section, you see the Bare Act. Sir, simple. One point is very clear. When you have a ability to read the Bare Act and complete, no book can ask a question beyond what is there in the Bare Act. Adi pakka. Reason also I will tell you. Open Institute study material. It is a ditto copy paste of Bare Act. Students are not reading because of volume. But I am making it simplified now. So listen carefully everything. Once we complete capital gains completely, you open any part of study material. 160 pages study material is there, capital gains. We will cover everything in the class. That's a guarantee. If I do not complete, catch my caller and ask, Koushik Mukhesh, what you said, what you did, capital gains we did not complete fully. I am telling each and every point I will cover. Once everything is completed, then we will start doing the problems also on this. Then full clarity will come, not just from the exam, from your life perspective also. You will see capital gains in a different way, in a right way. Okay, let's read. Transactions not regarded as transfer. Nothing contained in section 45 ante chargeability of capital gains tax shall apply. Nothing in 45 shall apply means section 45 shall not apply to the following transfer. To the following transfer. Okay. Now listen carefully. 1, 2, 3 list is given. These are transfers. These are transfers. No, sir, those are not transfers. Like this, you should not think they are transfers only, but they are not applied with the section 45. See, they are not saying these are not transfers. They are saying to these transfers, 45 will not get attracted. Understood the point clearly? Yeah? Means 1, 2, 3, 4, 5, 6, 7, 7A, 7B, 7C, 7D, 7E, all these are transfers. But to these transfers, capital gains tax will not get attracted. See, the following are not transfers. Like that he did not tell. He said, section 45 shall not apply for the following transfers. And these are all transfers. But to these transfers, capital gain chargeability will not be there. This is the first understanding of the section. Okay. I think in your reading perspective, change might have come at least by now. So you might have listened somewhere normally at IPCC level, at the CA inter level or somewhere else. These are not transfers. No, these are all transfers. But these transfers do not attract capital gains tax. Okay. Okay. Now, what happened? Let us see. Nothing contained in section 45 shall apply to the following transfers. When I say to the following transfer, I have given the list already. Other than this, any transfer will attract capital gain tax. So what is the first one? Which is not a transfer chargeable to tax. Like that you should read. Any distribution, okay, of capital assets, okay, on partition, either total or partial partition of a HUF. Read the point first. Read the point first. Read properly. By the way, this amendment. I said na amendment applicable for May 26 exams. This amendment. That we will read later. First read the point 1. Okay, done. Let us now go into the post-mortem. Okay, let us go into post-mortem. Listen. So, post-mortem in the sense, word, let us remove and read. Section 45 shall not apply. Means charge of capital gains will not get attracted in case of distribution of capital assets on total or partial partition of HUF. Okay. Question 1. If there is a partition of assets, if there is a partition of HUF and distribution of capital assets is made to the family members of HUF, any transfer made, okay, will be chargeable to tax. Capital gains tax are not chargeable. I repeat, there is a HUF, went on a partition of assets, family members received it. Any transfer made of that particular capital asset is a transfer or not a transfer? It is a transfer. Okay, and it is chargeable to tax as well. Sir, no sir, it is not chargeable to tax. Adi, that is called as innocence. In another language, we can call it ignorance as well. See, always remember one point. He is talking about not a transfer from the point of view of section 45. Okay, sir, I did not understand what you said. Ade, that's what I call it innocence. See, ignorance of law is no excuse. Na? I'll explain how you are reading and how you should read. See section 45, charging section. Any profits or gains arising from transfer of capital asset in the previous year, okay, shall be chargeable to income tax and deemed to be the income of the previous year in which the transfer took place. That is 45. This will not apply in case of that. Okay. So, even though there is a profit or gain arised from the transfer, this particular tax will not be levied if the profit comes in the eve of the transfer or distribution of capital assets at the time of partition of HUF. So, how to understand this? Listen, I will explain. Listen carefully. Slowly, I will point out each and every minute detail. There is a HUF. Went on a partition. Assets are given to the family members. Okay. Now, what they wanted to tell is section 45, capital gains tax will not be there. They are not saying the tax will not be there. They are saying capital gains tax will not be there. Sir, anyway, that's the meaning. Only capital gains, na? Are innocence. Listen carefully. Now, listen. There is a HUF. Partition happened. Assets given to a member. What is given? Assets are given to member. Transfer completed, na? Yes. On this, there is no capital gain. Perfect. This person who took the partition assets again transferred to some other person. Now, this is also a transfer only. But this is chargeable to capital gain tax because those are partitioned assets. Those are not at the time of partition. See, I will explain. See the screen. That's why read the Bail Act properly. They asked a question also on this in exam. Nothing in section 45 shall apply to distribution of capital assets on. That word on is very, very important. On the partition. Not any time of the partitioned assets. See, HUF gave to one of its member a property, a capital asset. Now, on the partition he received. For the HUF, it is not a transfer. For the HUF, it is not a transfer chargeable to tax. Okay. So, any distribution made by HUF, it is not chargeable to tax. But recipient is not HUF. Na? Recipient is a family member. If he transfer, it is a partitioned asset. It is not on partition. It is already partitioned. 2022 year partition happened. Asset came. Okay. Who transferred that asset? HUF. For HUF, this is not a transfer chargeable to capital gains. For HUF, this is not a transfer chargeable to capital gains. Okay, correct. But for the recipient also there is no tax now. But subsequently, if that recipient transfers that asset, Now this is not at the time of partition. This is a partitioned asset. It does not attract this particular thing. Therefore, it will be treated as a transfer chargeable to capital gains tax. So try to understand it clearly. Okay, try to understand it clearly. My question is very simple. Whenever there is a partition of HUF, HUF transfers to its family members. That transfer is not chargeable to capital gains tax. Subsequently, if the family member transfers that to some outsider, capital gain tax will get happily attracted. The reason is that is not distributed on partition, that is already partitioned asset you are transferring, that will not invite clause 1. Therefore, it is a transfer chargeable to capital gains. Okay, so see, analysis. This one line is there na? On that one line, I have given 4 pages explanation. No new question can come in examination beyond this. Not guarantee. Okay. There is a HUF. So 4 pages na. But when you complete it, just in 4 minutes you can complete everything. For me, writing time will be taken. Okay, I will take 2 hours, 2.5 hours time to complete each and every part, because I have to do my brainstorming and analysis. How best we can deliver with proper diagrams and illustrations. So there is a HUF. That HUF is undergoing a partition. Okay, there is a HUF. That HUF is undergoing a partition. Okay, in the due course of partition, capital assets are distributed to the family members. Okay, such a distribution, if you transfer, that is not a distribution to them, that is only a transfer. This is a transfer in the form of distribution. Such a distribution shall not be a transfer under section 47(1). So 45 will not get attracted. So eventually, there will not be a tax on capital gain. See, there is a HUF. This HUF is having 10 members and 20 assets, properties. Very big HUF. This HUF is now getting partitioned. Each member of HUF is entitled to 2 capital assets. This is a family member 1 will get 1-2 partition. Family member 2 will get 3-4 partition. Like that, last 10th family member will receive 19-20 capital asset. Means what? Every family member will be given with 2 assets. Okay. Now who is transferring? HUF is transferring. To whom? To its family members. Therefore, they said that even though HUF is transferring all these capital assets to the family members at the market value, even then it will not be treated as a capital gain. Say for example, HUF purchased a property for 10,000 rupees. On the date of partition, the value is 60,000 rupees. 60,000 rupees. That means if it is transferred not to the family members but to an outsider, HUF should have paid 50,000 rupees on that capital gain tax. But now that is not getting attracted because it is at the time of partition distribution. Okay. Now question, why this provision came into income tax? That is important. Everyone will read this section. Everyone will read clause 1. Everyone will remember this. They will mug up literally without understanding the idea behind the lawmaker. What could be the possible intention of the lawmaker in bringing this as an exemption from tax? Reason is very simple. HUF and members of the family are not treated differently. There is no separate legal existence. When there is no separate legal existence, what will happen? When there is no separate legal existence, members and family are treated one and the same. Members and family are treated one and the same. This is not transfer. This is only relocation of assets. Previously, all the assets are in the hands of family. Now the assets are relocated in the hands of family members. Previously, it is a joint ownership of all the family members. Now it became the single ownership of family members. Owners are not changing. Title is not transferring. Nothing has changed. Who used to hold the asset previously, now also same persons are holding the asset. There is only relocation but not a transfer. Therefore, transfer of assets at the time of HUF partition is not treated as a transfer under section 47 to attract capital gain under 45. It is only treated a relocation. That's why it is given as an exemption. I have given intention. This is seen as a relocating of capital assets to joint owners who already own it. Okay. Next. Section 2, clause 42A, explanation 1, sub-explanation 1, clause A. Let us see what is this. Section number 2, clause 42A. Okay. See. Section 2, clause 42A, definition of a short-term capital asset. We completed up to here already in the definition part. Okay. In the definition part. 24 months, 12 months, big sheet we have prepared now. But explanations I did not complete. These are all explanations. Sir, what is this explanation, sir? Period of holding. What is it? Period of holding. Sir, I did not understand what it is. Sir, I will explain. Listen carefully. See. HUF is there. This HUF is there. This HUF on 1/4/22 purchased a house property. Okay. This HUF went for partition on 4/10/2025. 4/10/2025 it went for partition. Okay. Now, see here. On 10/10/25, on 10/10/25, on 10/10/25, family member transferred it to an outsider. Okay. Now listen carefully. From this period to this period, it is the HUF in whose hands the assets are. Between this and this 6 days, asset is in the hands of the family member instead of HUF. Okay. Now, what is the period of holding? Period. What is the period of holding? Period of holding here will be 6 days. Wrong. This is what he wanted to tell. Period of holding should not be seen from the date on which a partition happened. It should be seen from the date on which the previous owner acquired it. Previous owner acquired it. Reason is very simple. Yeah. When really partition happened on 4/10, is there any tax that is paid? No. Means there is a pending tax from 1/4/2022 onwards. The acquisition has a pending payment of tax. Therefore, when they consider period of holding in case of the transfer or on this day, they will consider period of holding of the previous owner. Means you should not consider your period of 6 days. You should also include the period of holding of the previous owner into it. Okay. So try to understand clearly. If this provision is not there, which provision? That exemption in 47(1) is not there. HUF might have paid tax on 4/10. For example, HUF key, there is no exemption. Partition time distribution of capital assets is a transfer. No exemption. What would have happened? Market value of the assets we will take minus cost of acquisition. When you acquired 22, when you partition 25, long-term capital asset. Yeah. Just because of the reason partition happened, okay, and since it is exempted, this fellow family member have taken on 4/10, transferred on 10/10. He will tell that my holding period is only 6 days, so therefore it is a short-term capital gain, or the asset is a short-term capital asset. Like that they will tell or not. And what they will do? short-term capital loss or short-term capital gain will absorb, okay, will get absorbed. Set off and carry forward provisions. Long-term and short-term, both it can use. Therefore, try to understand clearly. And second thing, short-term capital gain rate is higher than long-term capital gain. Therefore, considering so many aspects, lawmaker brought section 2 clause 42A. Explanations were brought. What is section 2 clause 42A? Short-term capital asset. What is a short-term capital asset? Generally 12 months period. Immovable properties and some specified movable properties 24 months. Okay. 12 months from what date I should see? Transfer data. I transferred on 10/10/25. When you acquired this on 4/10/25. No. Don't take like that. Take the period of holding of the previous owner also, because the previous owner is not even assessed to tax when partition happened. So consider full period. That's what said in explanation number 1. In this point B, in case of a capital asset which becomes property of the assessee, imagine assessee is a family member. In case capital asset which becomes property of the assessee, in the circumstances mentioned in section 49(1), there shall be included the period for which asset was held by previous owner. Sir, what is 49(1), sir? Par. See here. 49(1). Where capital asset became the property of the assessee on any distribution of assets on total or partial partition of HF. Game over. So as per section number 49, subsection number 1, clause number 1, partition timeline, if there is any distribution of assets that happened, okay, distribution of assets that happened, whenever you are considering that, whenever you are taking the period of holding, don't consider only the period of holding from the partition date. You should also include period of holding of the previous owner, that is a HUF period. So HUF held for 3 years, you hold it for 6 days, it becomes 3 years and 6 days period of holding to the transferor who is a family member. Okay, so that is called as a harmonious construction. Harmonious interpretation means when two provisions are discussing about same subject matter, merge both and read to give a correct meaning. Sorry. So distribution of capital assets. Now what we completed here? So holding period of the transferee in case of subsequent transfer, holding period of the previous owner also is included. I'm very sorry. B. A is liquidation, B. So explanation 1B to section 42 clause 42A. If you want, you can also write. Read with section 49(1)(1). Cost to the transferee, cost to the previous owner and improvements. Sir, who said, sir? Who said? Sir, what is the meaning of this statement? What is the meaning of this statement? See here. Okay. HUF, partition, subsequent transfer. HUF, acquired property on 1/4/22, cost of acquisition 1 CR. Very good. Partition happened on 4/4/25. Okay, 4/4/25. Okay. Partition time distribution of capital assets happened. Okay. Next. Subsequently, this fellow also transferred. Okay, what he has done? He has made a subsequent transfer to some other person. See, I'm writing clearly. Subsequent transfer by family member. When on 10/10/25, subsequent transfer happened. Okay, for 2 crore rupees. 2 crore rupees. Okay. Now the question comes. Whenever distribution of capital asset happened, I repeat, whenever distribution of capital asset happened, on the date the market value is 1.5 CR. Okay. Hey, listen carefully or else you can't understand. Distribution of capital asset when it happened, market value of the capital asset is 1.5 crore. HUF purchased it at 1.1 crore. But there is no capital gains. Therefore, no tax is paid on that 50 lakh rupee. No tax. Okay, very good. Now question number two. This fellow sold it for 2 crore. He acquired that particular property on the HUF partition. Nothing is paid. So he just received the asset on partition. No consideration. It's like a gift. Don't call it gift. Partition is a partition only. Example I am telling. No consideration. Asset came into his hands on HUF partition. Okay, very good. So cost of acquisition is 1 crore. Asset came on partition to him without a consideration. Okay. Now 2 crore rupees is the market value of the particular property on the date of his sale. So what is the full value of consideration? That is the sale value, 2 crore minus cost of acquisition. I did not acquire that. So cost of acquisition will be taken as a nil. Once the cost of acquisition is taken as a nil, capital gains, the long-term capital gain, because we need to include the period of holding of the previous owner. So therefore, because of section 2 class 42A explanation number 11B, we should include the previous owner holding period. It becomes a long-term capital gain. How much is a long-term capital gain? 2 crore. On this, capital gain tax will be levied under section number 111, 112A, depending on the type of asset. From this, what you understand? Huge tax will be levied on this per fellow. To eradicate that, section 49 came for the benefit of assessee. This is not to torture or harass the assessee. It said that though there is no real cost of acquisition here, consider the cost of acquisition to the previous owner as your cost of acquisition. Therefore, you should not take 0 value here. You should take 1 crore value here. This is what said in section number 49, subsection 1. Let's read. Where capital asset became the property of assessee, family member, on any distribution of assets on total partition of HUF, the cost of acquisition of the asset shall be deemed to be the cost for which the previous owner acquired it. If any improvements are done, those improvements also you please add. That should be considered as a cost of acquisition, not 0 value. Okay. That one line has so many sections that will get attracted. You as a student, please take a book, write down all the sections which are getting attracted. Preparation time, very, very useful when I am solving questions from CA final workbook. Okay. So CA final, there are around 48 times questions came on capital gain. All 48 of CA final questions I will solve. Inter students also can easily solve them. So final students, you have to solve them. So once you solve all those, inter students, it's a cakewalk. Final students, you should be very careful about these provisions. Okay. So partition of HUF time. Illustration. A house property is purchased by HUF in 1950 for rupees 40,000. Okay. It is given to one of the family members in 24-25 at the time of partition of family. What will happen? It will not attract section 45 because distribution of capital assets on partition, either total or partial partition of HUF to the family members is not treated as a transfer. Since house property being a capital asset is given at the time of partition, it is not regarded as transfer, hence no tax on capital gains. Next. As per the Finance Act 2025, we are going to answer another question. See the question first. X HUF is a HUF. X is a HUF. The family acquires a residential house at Delhi for rupees 5,10,000 on April 1st, 2023. Okay. Family undergoes a complete partition on November 1st, 2023. And the residential house is allotted to Y, one of the family member. Fair market value is 6 lakh. Y sells the house on March 15, 2025 for rupees 6,90,000. Determine the amount chargeable to the capital gains in case of X HUF and Y as well. Read the question. See, solving answer will take only 1-2 minutes, but quoting proper section in exam, writing proper explanation in exam gives you that 4 marks or 5 marks. Okay, this is a RTP question. This I have taken from one of the I did not remember the year exactly. That's why I could not write you. That's why I could not write the year number. Very latest, 24 or 25 RTP, I did not remember. But this is a CA final RTP. I found this question. Read the question first. Okay. Hopefully you read the question. I give enough time for you because there are 3 sections that squarely gets attracted for this question. For that I have given that time for you. Okay. Let us see what happened. There is a HUF. That HUF acquired a residential property in Delhi for 5,10,000 on April 1st, 2023. Family then undergoes a complete partition on November 1st, 2023. Residential house is allotted to Y, a member of the family. FMV is 6 lakh. Y also sell the house on March 15, 2025 for 6 lakh 90. Determine the amount of chargeable capital gains in case of X, HF and also Y. First of all, there are 3 situations that get attracted. What is the 3 situations? See, I have given here. First, tax treatment in the hands of HF. That is dealt by 47(1). Okay, distribution of capital assets by HF at the time of partition. Next, tax treatment in the hands of family member. Okay, dealt by 49(1). Dealt by 49(1). And section number 45 as well. Next, period of holding that we need to understand. Section 2 class 42A. Let us see. Point number 1. Tax treatment in the hands of HEF. HEF has transferred the assets, capital assets, to the family members at the time of distribution of its assets on partition. which is coming under exemptions to section 47 under section 47 clause 1. Therefore, it is not a transfer, no capital gain tax. Therefore, tax is nil. Next, tax treatment in the hands of family member. Tax treatment in the hands of family member. Here, 45 with 49 1, because what is the cost of acquisition of this family member? It is a transfer and the tax is there on capital gains. Cost of acquisition will be 49 1, cost of acquisition to the previous owner. So what is the full value consideration? 6,90,000 is sold. Your cost of acquisition will be cost of acquisition to the previous owner, 5,10,000. So 6,90,000 minus 5,10,000, short-term capital gain will be 1,80,000. Sir, how can you tell that it is short-term capital? Because the short term is decided by the period of holding. Okay, period of holding. When partition happened? November 1st, 2023. Okay, November 1st. Sell the house on March 15, 2025. March 15, 2025. Between what is the period? Wrong. Like that you should not take. You should not take from the date of partition to your transfer date. You should consider the period of holding of the previous owner. So from April 1st, 2023 to March 15, 2025, since it is a residential house, which is a immobile property, as per section 2 class 42A, 24 months should be made in order not to call it a capital not to call it a short-term capital asset, but here it is less than 24 months. Therefore, this is a short-term capital asset. So, capital gain, whether long-term or short-term, depends on period of holding by the previous owner. Period of holding from 1/4/23 to 15/3/25, less than 24 months. Therefore, it is a short-term capital asset. Short-term capital gain will get attracted 1,80,000. The concept here. Read the answer. Read the answer properly. Sure. Now, I have one illustration which explains the reason why provision was given this way. Why we need to consider the 49(1) period of 49(1) cost of acquisition to the previous owner? Why we should consider? What could be the rationale behind 47(1) read with the 49(1)(1), read with section 45(1), read with section 2 class the 42A, explanation of B? Why we have to merge all these four and read? What could be the possible intention of the lawmaker? Is what I have given through one very good illustration. Sir, I am telling again and again, my efforts will be not in reading the provision. My efforts will be in harmoniously interpreting the provisions. Okay. 4 or 5 sections are there, means we should interlink all the sections. Then you should read. Then the real spirit will be understood. Exam interconnected questions you will just like that solve when others are facing a trouble in understanding what is this HUF partition. Okay. See, I am giving you a word today. There is another concept called as conversion of partnership firm into company. Okay. Or reconstitution of a firm and distribution at the time of admission and retirement of a partner. I made 5 illustrations, golden illustrations here. If you do that now, life you will never forget about reconstitution of a partnership firm. Later stage it will come. But still, why I am telling is, I have that much confidence that we will do super good in capital gains chapter, which is one of the most toughest areas in income tax. Once after that, I already told na, we'll start directly with international taxation. Okay, starting with double taxation avoidance agreement. After that, we will go for double taxation avoidance relief with articles in foreign agreements. Later, we will go into non-resident Indian taxation. Next, we will go to non-resident taxation other than NRIs. After that, we will go for transfer pricing provisions, GAR provisions, BEPS. So many things which are coming for 30 marks in final. 35, almost 35 marks in final. We will cover all those things in depth, not just reading and going on the provisions on an overall basis. Okay, so anyway, I think you understood this concept clearly, yeah, everyone. HAF partition. Okay, now illustration explaining the rationale behind the provision. Okay, I created one illustration. There is a HAF X. Family members are X and Y, two family members. There is no requirement that there should be 10 or 12 or 20, 30 family members. 2 also is a HAF. Okay, the balance sheet is as under: capital of X 60,000, Y 1,50,000, Y 1,50,000. House property 1, market values are given 60,000, 1,50,000 other balance sheet. Listen carefully what happened. Other details: house 1, cost of acquisition 10,000, date of acquisition May 31st, 2023. This is March 31st, 2024. Cost of acquisition 40,000, house 2, and date of acquisition is July 10th, 2023. Numbers I have given only for understanding sake. You should not ask which house property is purchased for 10,000 in India. That's a foolish question. Example, when I say what does it mean, I wanted to make the example as simple as possible. Okay, instead of 1,000, if I put crores here, it will become 10,000 crores. If I put lakhs, 10,000 lakhs, thousands, 10,000 thousands. So forget about it. Amounts are irrelevant. Concept is more important for us. Okay. So first see the question. Observe the question now on an overall basis. Okay. So that point. So first what happened? There is a HAF having assets and liability. Assets la there is house property 1 and house property 2. Capital account X and Y. This is the total values. Other details: house 1, cost of acquisition 10,000, date of acquisition 31st May 2023. House 2, cost of acquisition 40,000, date of acquisition July 10th 2023. Is the information given. Now listen, this is exam question. This is, I created this example for you to understand why this section came. Now let us understand the situation this way. Partition has to happen. Yes, partition has to happen. What is distributed? Capital asset has to be distributed. What is to be distributed here? Capital asset has to be distributed. So if you observe, capital asset, okay, capital asset has to be distributed. Now the point will come this way. HAF will have two options. Option number one. Instead of giving this asset to Mr. X, instead of giving this asset to Mr. Y, okay, see, I will tell this way. See the screen. House 1, cost of acquisition 10,000. Okay. Now what is the market value? 60,000. 60,000 is the market value. So market value 60,000. Purchase cost is 10,000 rupees. Now what they have done? 10,000 they purchased, running at 60,000. Option 1 available to HAF at the time of partition. I can sell this house to some third party for 60,000. I will get cash 60,000. Now, that 60,000 rupee cash I will give to the HUF family member. Next, asset 2. I purchased at 40,000 in 2023. I will sell to some outsider at 1,50,000. 1,10,000 cash excess will come. I will give total 1,50,000 to the family member. Okay. So total 1,50,000 I will give. Repeat one more time. What is option number 1 to the HUF? Option 1. Purchased at 10,000. Sold at 60,000. 60,000 cash will come to HUF. Give it to family member. Give it to family member. Next. Second one. 40,000. Sell at 1,50,000. Give 1,50,000 to family member. Now listen carefully. HUF purchased this 10,000. I repeat. HUF purchased this asset at 10,000. Purchased this asset at 10,000. Sold to some outsider at 60,000. Means what happened here? Sold this asset to outsider at 60,000 means what happened? There is a capital gain of 50,000 on which HUF has to pay tax because this is not a partition asset. This is given to some other outsider. Okay. Next. 40,000 sold at 1,50,000. 1,10,000 capital gain is there. On that they have to pay the tax. And technically what is happening here? 1,10,000 here. 50,000 here. 1,60,000 on that HUF should have paid capital gain tax. Clear? But because of doing a tax planning, instead of selling this 10,000 rupee asset at 60,000 to an outsider, if I give the same asset to the family member as a partition, it is a relocation, not a sale transaction. Therefore, there is no capital gain tax. There is a tax planning done by HUF. Correct or not? So there is a tax, tax planning. They avoided the tax legally as per the provisions of income tax. Okay. So same 60,000 you can give to the family member in two ways. Give in the form of asset, give in the form of cash. Cash is not a capital asset. Cash is not a capital asset. So what will happen? 10,000 sold at 60,000. Okay. 50,000 capital gain. But because of partition, what you are doing, you are not selling, giving asset, you are giving cash. 10,000 rupee asset sold to outsider at 60,000, 50,000 you should have paid tax. To escape that, what they are doing, 10,000 asset, they will give as a partitioned asset directly. 60,000 they will give to him. Understood? Yes. Now listen carefully. See here. Okay, see here. This HUF has two options. Option 1, sell this 10,000 asset at 60,000, pay capital gains on 50,000, balance amount after paying the tax, you can give it to your family member. Okay. Option 1. Option 2. Okay. So on that 50,000, you have to pay the capital gain tax. Balance will be there after paying. Give cash to the family member. One option. But in that, there is an immediate payment of capital gain tax. To escape this, they are using the provisions of income tax only. What they said, you only said in a distribution of capital assets at the time of partition is not a transfer because it is just a relocation of asset. Instead of selling it to some outsider and pay tax and distributing the balance to the family member, I will give this directly to you. So directly 60,000 asset I will distribute. Now you are getting 60,000 value, but you are not paying any tax. This is a wrong way of understanding. Okay, see. Distribution of capital assets by HUF on partition to its family members is not transfer taxable. 100% correct. But it's not a permanent exemption. It is only a temporary exemption. Do you know why? Subsequently, if that fellow, I mean the family member, transfers that capital asset, then he will transfer after some time. At that time, there will be one market value. At that value, he will sell. You should take cost to the previous owner. Therefore, you should take 10,000, not the 60,000 you should take. For example, see, option 1. HUF may sell the house. 1 and 2 and sale consideration minus capital gains may be divided between X and Y. In this case, there is an immediate burden of capital gain tax. Purchase at 10,000, sell to outsider at 60,000, 50,000 capital gain. Let us say there is a 10% tax. Example. Okay, example. So 50,000 into 10%, 5,000. 45,000 cash is there now. After paying tax, distribute it to X. Like that. Same also do with Y. 40,000. Sell to outsider at 1,50,000. Capital gains 1,10,000. 10% comes to 11,000. 1,10,000 minus 11,000 comes to 99,000. Give that 99,000 to Y. This is one way. In this case, there is an immediate payment of capital gain tax. No, sir, I don't want it to involve any capital gain tax now. Then instead of selling it to outsider and giving cash to the family members, directly transfer the assets to them. In this case, you can escape immediate capital gain tax. That's it. Immediate capital gain tax you can escape. Not permanently, you cannot escape the tax payment. Option 2. HUF, instead of distributing the cash after paying capital gain tax, may distribute the assets directly to X and Y. And the distribution is not a transfer, and thereby there is no capital gain tax. Therefore, capital appreciation of 50,000 in case of house 1 and 1,10,000 in case of house 2 is not subjected to capital gain tax temporarily. But this is not a permanent exemption. If X sells house 1 to an outsider on April 30, 2024 at 67,000, you should not consider 67,000 minus 60,000 partition amount. At that time, what is the value and tell I will pay tax on 7,000. No. Capital gains is escaped by HUF by partition. From that date, whatever the appreciation is there, you should pay tax. Since the HUF did not pay tax on that. That's why 49(1) says cost of acquisition will not be the cost of acquisition on the date of partition. You should also include the cost of acquisition to the previous owner. That's the reason why 49(1) came like that. This is the reason. Okay. So 67,000. Then not only his gain of 70,000. Family member received when the value is at 60,000. 67. He will tell capital gain is only 7,000. But there is no capital gain paid on that appreciated 50,000. You should also pay tax on that. Therefore, you should take the cost of acquisition to the previous owner. That's why 49(1) section came that way. So, not only his gain of 7,000, but a tax-free capital gain of 50,000 is there. That which is not subjected to tax earlier will also be taxed under the head capital gain. So full value consideration 67,000, cost of acquisition to previous owner. This is because of section 49(1) mode. 57,000 will be capital gain. Means you are now paying the tax on. We are now paying the tax on 50,000 escape tax then or not escape. The advantage you have taken that 50,000 plus your 7,000 appreciated value, totally the 57. So this 57,000 is tax which is not subjected before and which is now added newly, that extra 7,000, both you have to pay the tax. That's how sections are designed with the section number 49 subsection number 1. A big clap to the lawmaker for putting a provision that way. So now you have understood why 49(1) says consider the value to the previous owner. There is a reason. Okay. So with this we completed section 47 clause 1. 100% completed. Okay. Partition time, whatever the sections are attracted, I completed each and every minutest of the parts. Okay. Like this 21 concepts are there in transfer. Okay. All will not take this much time here. First 3 will take, first 2 will take time. Next 8 concepts will be completed just in 1.5 hours. Again another point will come, that will take another 1 hour time. Like that totally transfer will take somewhere around 5.5 hours time. Okay. First one will take a lot of time. Second one will take more time than this. Okay. Second one will take more time than this. But I will try to complete in lesser time only. So concept is bigger than this. But charts are available. Therefore, we can complete it like this particular section. 47.1. So this video ends up with 47.1. Next lecture, I will upload on 47.3. So where is 47.2, sir? 47.2 is a missing part. Why? It is deleted now, not there. You can see 47.2 is a deleted one. Not there now. So directly we are coming into 47.3. 47.3 is an amendment provision. Is a amendment provision.